Just these are new numbers, Mike. On the downside for the S&P forecast, 2,500, maybe 3,000, middle of the road, 3,250 on the bullish case. Is that new for you?
Yeah, they actually went up, Joe, in the past week, and really the catalyst for that was just the Fed's actions last week again, illustrating that they will go kind of wherever they need to make sure that markets stabilize. And the movement into high yield, I think, was inevitable if they needed to, but the fact that they did it sort of proactively is powerful. And that, suggests to us anyways that we are still very much in this era of financial repression. The Fed will do whatever it takes to kind of make sure we don't go into a depression. And part of that, for investors' sake, is that means you got to grab risk premium when it comes. And it doesn't stick around very long when the Fed's in there buying. So that basically the price targets go up because multiples can actually expand further from here. Even in this period when uncertainty is so high, financial actors will participate.
Right. It's really hard for people to understand any type of bullishness, Mike, because they see what's in front of their face, and it's just very difficult. And I need to ask you about that. I mean, that's a pretty big range in the first two, 2,500 to 3,000. But even on the low side, that would not be new lows for the averages. So you're making a statement there, but you're giving yourself some breathing room on things worsening, obviously. But that 3,250 number, people are going to have trouble with that, or with believing it, just because of the inherent worry about life never returning to normal or not near term, Mike. And a lot of people don't, they discount technicals, even some, and focus on near term fundamentals when they talk about stock markets. And they're usually wrong, obviously. But 3,250 really does sound like a return to normalcy for the economy and for consumers, and people don't see that. How can you justify that number by the end of the year?
Yeah, look, I mean, it's a bull case, right, Joe? So that's not our base case. It's an optimistic view. But look, I think there is a real possibility that because of the nature of this crisis, which we can agree is a health scare and it's real and it's present danger, it's eliciting the kind of response from Congress. Forget about what the Fed's doing, but Congress has reacted in a way that I don't think either one of us would have thought was possible 6 months ago. In fact, we were discussing this, I think, on the show 6 or 7 months ago, that how would we ever get fiscal stimulus this year? And here we are getting the biggest fiscal package in history. We're going to run a 20% fiscal deficit, and there's discussion about doing even more. So what happens if perhaps we get back to work on schedule, and maybe we get back even ahead of schedule for some reason, and all of a sudden you've got all this stimulus in the pipeline? They're not going to give it back, and you could lead to a really, really powerful outcome for 2021. That's an upside case, and that's how you can get to that 3,250. It's not our base case, but I think it's as every day goes by, I think the market will start to think about both the upside case and the downside case. So we don't have to play out right now, but I think that is a real possibility.
Just hard to imagine 40%, I could probably come up with, 40% of the economy 6 months from now still being severely affected, whether it's movies or take your pick, like airlines, right. Whatever you want to take. So it's just hard to connect. Even going back to 3,000, which is, last year 3,000 was a bullish number for a lot of people. So even 3,000, to return to normalcy is something all of us want, and I'm hoping for it a lot, but it's hard for people to see through the current situation back to that.
Yeah. Well, let's take another stab at it. So, we all know we're in a recession now, okay? And we've been in a late cycle environment for quite a while. And, of course, when you're in a late cycle environment, people feel really good. And I'm talking about, market participants. And, of course, we got a little too excited at the end of last year and earlier this year. Coming out of a recession, Joe, there is going to be a cyclical impulse in any event, no matter, what kind of policy response we're getting. And so, getting back to normal is just the natural evolution of a business cycle. And once again, we're talking about year-end price targets, which really will take into account what 2021 looks like. Right now, we're in first quarter earnings season for 2020. Everybody expects it to be, pretty bad, and we would agree. But I would argue that the market is already looking past 2020. It is written off 2020. We need to make sure, that a certain number of companies don't go bankrupt. I mean, you want to stay away from those types of investments. But clearly, as we look forward to 2021, it's going to be a better year, and it's just a function of how much better.
So, so we're even giving the market the benefit of going past its usually 9-month discounting mechanism. Is anything that you're forecasting dependent on a vaccine or some type of medical breakthrough, Mike, or you think that it just somehow we don't even need to be experts about how the pandemic plays out? You can just use stock market analysis and economic analysis to figure this out?
Well, I mean, clearly, the circumstances of today are unique, and so that plays into our analysis about the economy. And look, I mean, you mentioned it before. Our bear case is 2,500. There is a scenario too where things go poorly, and that's why the range is bigger than normal, Joe. Normally, we wouldn't have a range this large. So we think we are accounting for that. And if you want to put round numbers around, the base case is kind of a 50-60% probability outcome, and the tails, the bull and the bear, are 20 to 25% sort of outcome probability. So this is not an exact science, but those are the parameters we're dealing with, which is why we look, when we got down to 2,400, we were pretty aggressive because we felt like your downside was really limited. Now we're back at 2,800. You could argue the risk reward isn't as attractive as it was, but there are always things to do. As you guys always talk about, there's a bull market in something always, and that's the other part of our message is that people need to be thinking about what's going to be the next bull market.